Hi, this is CH. This video is part of a series of videos titled My ABCs or Absolutely Biased Comments to share how an individual investor like you and I can try to find out more about an investment fund from public sources and do some basic research or simple due diligence before deciding to buy the fund or walk away. Do explore the other funds covered in this series and subscribe to the channel if you find this video useful. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the Allianz Oriental Income Fund. This video is done as a follow-up request from a viewer's comment in my previous video covering the Franklin Income Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos and I'll be happy to work on it as long as I can find enough information on the product. Allianz Global Investors, also commonly referred to as AllianzGI or AGI, is the original asset management arm of Allianz since 1974 and was properly established as a global integrated investment firm in 2012. Allianz is the world's largest insurance company and Europe's largest financial services company, so there is definitely a high degree of business stability for Allianz Global Investors. Another popular fund provider, PIMCO, is actually also a subsidiary of Allianz, though both asset management brands run independently. As of June 2025, Allianz Global Investors has over 700 investment professionals located in over 20 office locations globally, managing about 560 billion euros of assets under management or AUM. Assets are quite evenly distributed across equities, fixed income, multi-asset, and private market solutions. Considering insurance company-owned asset management businesses tend to be fixed income heavy, Allianz Global Investors is rather well diversified for its exposures. The firm doesn't follow a single investment philosophy or approach, but instead is open to different active investment strategies, which is probably an extension of its history as a conglomerate of boutique investment teams. The Allianz Oriental Income Fund is a sub-fund under the Allianz Global Investors Fund or AGIF fund family. AGIF is set up as a Luxembourg SICAV company structure and is UCITS compliant. The fund is registered as a MAS recognized scheme, which means it is suitable for retail investors. The Allianz Oriental Income Fund lists Stuart Winchester as the only manager for the fund. There is, however, no manager bio available in the Allianz website, so we will have to find the information elsewhere. Morningstar indicates Stuart has been managing the fund since the year 2000, which is a long 25 years by now. Interestingly, Morningstar also lists Ian Lee as a co-manager since 2014, but this is not indicated in the Allianz website. Here is Stuart's bios in Morningstar, as well as a photo of him that I found in the Swiss version of the fund webpage. As per described in the bio, he appears to have always worked in Asia and is currently based in Hong Kong managing Asian equity strategies. The Allianz Oriental Income Fund is quite a confusing product. The term Oriental is a rather outdated word that was mostly commonly used in Europe to refer to the geographic region that is east of Europe and would primarily refer to East Asia and Southeast Asia regions. Hardly anyone uses this word to define a geographic exposure anymore these days. The term income is commonly used to refer to funds with a high distribution payout strategy or a bond-focused strategy, like for example PIMCO Income or M&G Optimal Income or Allianz Income and Growth or BlackRock Global Multi-Asset Income, and the list goes on. However, the investment objective of the fund states that it aims at long-term capital growth. There is no mention at all about generating income or providing a high distribution payout. So what does the income in the fund name mean? It also states the fund is investing in Asia-Pacific equity and bond markets. So at least we know now that the geographic focus of the fund is really Asia, including Japan. So instead of using a confusing term Oriental, the fund should have just been named more accurately with Asia-Pacific. Additionally, investing in both equity and bonds seems to mean that this is a multi-asset fund. But is it really so? The fund benchmark is stated as MSCI All Country Asia Pacific Total Return Net Index. The geographic coverage tallies with the investment objective, but now we have a pure 100% equity benchmark. So what about the bonds invested by the fund? Is this a multi-asset fund or an equity fund? This is all really quite confusing, and I would even say it is misleading to investors. Let's find out more about the fund in the prospectus to try figure out what it is really trying to do. Allianz categorizes this fund as a multi-asset fund, so the fund details are found in the relevant subsection in the fund prospectus. Allianz is unfortunately known to provide very little details on the investment strategy and processes of its funds. The Allianz Oriental Income Fund also is currently not a focused fund, so there are no dedicated fund brochures or sales materials to help us understand the fund better. The prospectus only states the investment objective and a list of investment restrictions as seen here. There is also a long list of general investment restrictions that are not fund specific. So what I have done here is to extract what I think are more relevant to the fund and tidy them up so that we can see all the restrictions together. Let's first get a clear understanding what asset class this fund really belongs to. It is stated the fund can have a maximum 50% in cash during exceptional circumstances like market crashes, but that's not the norm, so we will ignore this part. More importantly, it is stated the fund needs to invest at least 50% in equities, but at most 50% in bonds. So this means the fund needs to have 50% to 100% equity allocation, and the bond allocation of 0 to 50% sounds more like tactical plays if some bond opportunities make more sense than equities at times. This also means that this is really more like an equity fund as per hinted by the benchmark use, rather than a multi-asset fund that has a proper long-term allocation into both equities and bonds. Another hint is that the fund manager is stated as an equity portfolio manager instead of a multi-asset manager. Therefore, regardless of how Allianz categorizes this fund, it would make more sense for investors to treat this fund as an equity fund, especially for performance comparison purposes. Let's take a look at the equity-specific restrictions next. The first point states the fund can invest in emerging markets, which doesn't mean much because majority of the Asia-Pacific market is considered non-developed markets. It then states the fund needs to invest at least 40% in Asia-Pacific equities. This would be superseded by the general restriction below that states the fund needs to invest at least 70% in Asia-Pacific equities and bonds. Within this, a maximum 30% can be invested into China A shares. There isn't much bond-specific restrictions except that the fund isn't supposed to invest in high-yield bonds, which suggests the tactical bond allocations would be meant more for risk reduction using safer investment-grade bonds. Asset class allocation can change flexibly over time, although this should be explained by the investment process of the fund, which is unfortunately not provided by Allianz. The benchmark index is stated in the prospectus, and interestingly it also states significant degree of freedom and expected minor overlap, which means the fund can have very different underlying exposures compared to the benchmark. There is no mention about the underlying stock selection process or selection criteria, so we won't really know the reasons behind the differences between the fund and benchmark. Nevertheless, it is clearly stated the benchmark is a returns target for the fund to outperform. Again, there is nothing mentioned in the prospectus about income, so the income in the fund name is really misleading. Now that we understand what the fund strategy really is, let's move on with the actual fund portfolio. The Allianz Oriental Income Fund has a pretty long track record, with the earliest retail share class available in Singapore being incepted in 2003. That being said, there were two rounds of fund mergers in 2005 and 2008, so we should really look at the track record after these mergers. The fund currently has around $1.2 billion of AUM, which is a decent size for Asian equity funds. The current asset allocation of the fund shows over 95% in equities and only 1.5% in fixed income. No proper multi-asset fund would have such an allocation split. Therefore, this reinforces what I mentioned earlier that this should really be treated like an equity fund. The country breakdown of the fund shows some notable differences versus the benchmark, that is MSCI AC Asia Pacific Index. While Japan and China remain the top two exposures at around 30% and 20% respectively, the fund has significantly more South Korea and New Zealand, offset with significantly less Australia and India. This shows some active investment decisions made here, although there is no information whether this results from a top-down macro view or is simply a consequence of the bottom-up stock picking process. Clear differences can also be observed in the sector breakdown. The fund has significantly more industrials and healthcare in exchange for significantly less financials, consumer discretionary, and materials. So there are some very clear and deliberate deviations from the benchmark, and we will see later if this translates to outperformance. The fund runs a rather concentrated portfolio of less than 60 stocks, compared to over 1,200 stocks covered in the benchmark. Top 10 holdings in the fund total 40% of the portfolio, and it is interesting to see almost no overlaps with the top 10 constituents in the benchmark. The bias in industrials is also clearly seen here, with 5 of the top 10 holdings in the sector. I am really curious how the fund manager ended up with such a differentiated portfolio versus the benchmark. And it is a pity that Allianz does not provide any information to elaborate on this, because it can be potentially an interesting story and a good marketing angle to promote the fund. The Allianz Oriental Income Fund only has a handful of share classes for the retail investor market. The oldest share class for Singapore market is the A annual distributing US dollar class, incepted in 2003. It is the only distributing share class available that implies distribution payout is not really a focus for this product. The AT accumulating US dollar and Sing dollar unhedged share classes were incepted in 2005 and 2009 respectively. The fund also launched the ET accumulating Sing dollar unhedged class in 2023 specifically for CPF investments in Singapore. There are a few other AT currency classes available, although they don't seem to be registered for offering to Singapore retail market. The A and AT classes have a 1.8% management fee. Adding other expenses gives a total expense ratio of around 1.85%. The ET class has a slightly lower 1.65% management fee and 1.69% TER. Around 50% of the management fees of A, AT, and ET classes may be paid by Allianz to distributors as trailer fees. The A and AT classes allow distributors to charge up to 5% subscription fees, although I think anything more than 2% for mutual funds is excessive. The A distributing US dollar class of the Allianz Oriental Income Fund has a very erratic distribution yield that ranged from 0% to 1.65% in the past 5 years. This means that this is not a good fund to obtain a consistent income stream, and investors are probably better off going for the accumulation share classes instead. This also reinforces what I mentioned earlier, that the income in the fund name is really misleading and does not represent the fund strategy or the fund's deliverables to investors. The Allianz Oriental Income Fund provides various time period returns and calendar year returns of the past 5 years in its webpage and fact sheet. The time period returns show the fund has some periods of outperformance and some periods of underperformance. For example, year-to-date looks to be quite good with nearly a 6% outperformance, but 5-year period is lagging the benchmark very slightly. The since inception period is however showing a notable outperformance of about 2.4% per annum. The calendar year returns is also showing significant differences versus the benchmark at times, suggesting the fund portfolio can be very different from the benchmark. Just looking at the past 5 calendar years, we can see the fund outperformed significantly in 2020 with about 28% and in 2021 with about 11%, then underperformed significantly in 2024 by about 9%. The fund webpage also has a dynamic performance chart versus the benchmark, that is useful for investors to review the historical performance trends. With this chart, we can see the fund has had slight but pretty consistent outperformance over time since its inception till 2019. This follows by the big outperformance in 2020 that was out of the norm, and in order for that to happen, the fund manager must have tweaked the portfolio quite a lot to overweight into the thematic exposures that were highly profitable when COVID started. These gains were partly reversed in 2022, when the world moved out of COVID, though overall it was a positive ride through the COVID period for the fund, which was good. Looking closer at past 5 years, we can see the fund has had less success and delivered near identical to the benchmark. There were periods of outperformance, but they were offset by periods of underperformance as well. For example, the apparently strong year-to-date outperformance is actually a catch-up from the 2024 underperformance, as clearly exhibited in the chart. It is strange, but I can't seem to find any ETFs that track the benchmark that is MSCI All Country Asia Pacific Index, so I can't do a direct comparison with an investable passive product. The best I can get is the iShares Core MSCI Pacific ETF or IPAC that has the developed countries including Japan and Australia, and the iShares EM Asia ETF or EEMA that has the emerging countries such as China, Taiwan, India, and South Korea. I have the 10-year chart here, but knowing the fund did exceptionally well in early COVID period, let's also look at the periods before and after COVID. Looking at the pre-COVID period from September 2015 to end 2019, we can see that EEMA led the pack most of the time, as China markets had been really strong during this time. Allianz Oriental Income mostly stayed in between EEMA and IPAC as expected due to its market exposure and had outperformed in 2019. The COVID period was as mentioned earlier, whereby Allianz Oriental Income had a really big outperformance in 2020 and held on that lead despite losing some of the gains in 2022. Post-COVID from 2023 onwards, we can see Allianz Oriental Income performing similar to IPAC and EEMA again, though this period it exhibited bigger drawdowns and overall slightly weaker returns, suggesting the fund is having difficulty trying to find opportunities to outperform the market. Let's compare the fund against some of the popular Asia equity funds in the market. On a 10-year basis, Allianz remains a clear leader, and again, this is mainly helped by the big outperformance in 2020. If we set COVID period aside and look at since 2023 onwards, we can see Allianz performance is average in the pack. So it is not that difficult to find other active fund managers that are doing better. This suggests that Allianz has not been able to replicate its 2020 success, which makes it hard to consider this fund from performance perspective. With that, let's summarize our findings. Allianz Global Investors is the asset management arm of Allianz, the largest insurance company globally. The business AUM isn't as big as some of the other fund providers, but having a big size parent helps to ensure stability of the business. Allianz doesn't provide any details on the fund manager besides a name, which doesn't help investors understand the people responsible for the product. Allianz also doesn't provide details on the investment strategy and process. It would be useful to provide, for example, the stock selection considerations, given this fund tends to deviate quite significantly from the benchmark in terms of the portfolio holdings. The significant deviations in the fund portfolio versus the benchmark has also translated to bouts of outperformance through the 20+ years of track record of the fund, showing the fund manager has been working hard to try generate alpha returns. The long-term performance numbers of the fund look good. However, they are boosted by a one-off significant outperformance in 2020 that unfortunately has not been repeated by the fund manager. If we exclude the COVID period of 2020 to 2022, the fund has delivered similar returns as the benchmark and the relevant ETFs, both pre-COVID and post-COVID periods. There are also other active Asia equity funds that have better returns than this fund post-COVID. My biggest issue with this fund is the fund name. Oriental is an obsolete word in today's context, though that's not the main problem. The income in the name is the misleading word, as the fund strategy and deliverables have absolutely nothing to do with income. Allianz should really rename this fund and recategorize it properly as an equity fund instead of multi-asset fund. In conclusion, I think the fund name absolutely needs to be corrected to stop misleading investors. On the fund strategy itself, I can see the potential in the fund's efforts to deviate from the benchmark in attempt to generate alpha returns, though that has not really materialized too much except for the year 2020. I can't comment on the strategy or the stock selection process as there is simply no public information available. But I do hope the fund manager can find ways to generate better returns going forward. This concludes my absolutely biased comments on the Allianz Oriental Income Fund. Again, if you find this video useful and would like to see more related contents, please subscribe to the channel. Thank you and have a great day.